broadcast of Back Roads of Illinois. We were bringing latest agricultural news and markets update on Back Roads of Illinois. Bring you like inside of the markets and interview with people in the agricultural industry for farmers and ranchers in central Illinois and across the Midwest. This is edition of Back Roads of Illinois. We were Central Illinois agriculture source, and in the Midwest alongside in Central Illinois agriculture, we were glad you're here on a Wednesday. I'm Cesar Delgado for today. We were talking about the tariff and farmers' feelings about it with Kristen Swanson from National Corn Growers Association and Commodities Markets with Arlan Sudermmann from Stonex in Kansas City. This is your agricultural news and markets update on Back Roads of Illinois. Former President Donald Trump grows a tariff from John Deere, Mexico, because Deere have made a decision to move in Mexico for labor cost and production cost. The former President Trump talked with the farmers on a round table in Pennsylvania. Both candidates want to talk with the farmers about their responses to the agricultural sector in Pennsylvania, Wisconsin. But tariffs is a drive point to the farmers about soybean demand for export to China. Finally, Argentina is planting soybeans after the disease in their corn crop in Argentina. Brazil has been planting in the field for corn and beans in Mato Grosso, Brazil. We were coming back with our guest Kristen Swanson from National Corn Growers Association. Stay tuned on Back Roads of Illinois. We were going to talk about agricultural policies and trade for our listeners. We were talking with Kristen Swanson from National Corn Growers Association in St. Louis. How are you today?
I'm doing well, Cesar. How about you?
I'm great.
Glad to be here today and have a chance to talk with you.
Can you give us an update on your trip in Washington, D.C. for recently?
Yeah, so in mid-September, I was in DC for a couple days. We had a few things going on. I guess I can talk a little bit about what I was doing there specifically, but also we had members from some of our staff and from a number of different states in town for a fly-in, and they were doing some visits with their own delegations. At the same time, we also participated in a larger commodity group coalition that was related to, letting legislators know that it's really critical that we get a farm bill passed. And so there was some of our ncga board members were out there for that purpose, and they were pairing up and partnering up with a few people from a number of other commodity groups and Farm Credit and Bankers Association as well, to talk about that. What I specifically was there for was related to 45Z. This is a provision in the Inflation Reduction Act that provides a tax credit to biofuel producers, but part of that credit includes some incentives for feedstock that is grown with climate smart agricultural practices. And so we were talking about the potential for corn and some of our needs in order to make that work well for corn and for corn to be to help contribute towards the lofty goals for sustainable aviation fuel and increased biofuels production, or I should say more sustainable biofuels production. And so I was out there for some meetings related to that, including a meeting at U.S. Treasury, because this is a tax credit. That is where the rules for how this works is originating.
You guys are worried about the Farm Bill if it is not passed for this year because of this election.
Yeah, well, I mean, I think for sure a big concern for commodity groups that we've already had a delay in the Farm Bill. I don't know that it's so much the concern is related to the election specifically, because I mean, it's already, we were hoping to get a Farm Bill passed last year. We already had the 1 year extension. And so I think that the messaging is we're in a tough economic environment for farmers. 2 years of big drops in expected incomes. The USDA just had some new numbers in early September out on that. And, I think that the messaging really is, it doesn't matter who, the outcome of the election is not the, regardless of what the outcome of the election is, we need another farm bill passed. And, we have, some ways that we could improve it as well, that us and other commodity groups have been advocating for a couple years now as we approach the original expiration deadline. But definitely important as we think about that
how
safety
the
net.
farmers is concerned about woes on trade for right now.
Yeah, I'm trade another, when we think about our big uses for corn, of course, we have ethanol and domestic uses and feed, aside from ethanol as being two big players, but exports make up about 15% of our use in a given year. And so exports and those trade relationships, very important to our corn growers. And, as we've seen, following the phase one trade deal in early 2020, we really ramped up corn exports to China to unprecedented levels in 2021. And then in 2022, China started importing corn from Brazil, which really changed up some trade flows and trade dynamics. And so I think our focus has been on, with China making Brazil sort of their preferred provider of corn and the U.S. more of a residual supplier for them, we have been working on other trade relationships. Mexico has been a huge trade partner, but we also have some outstanding issues related to GMO corn with Mexico that we are also working on getting resolved. We certainly want to keep Mexico as a trade partner, as our neighbor to the south, and that logistically makes sense. And they've been a big buyer this year, which has been really supportive of our export markets. But we, want to strengthen those trade relationships across the board to a number of other nations that have also been, buyers of corn and an important part of our market. Reduced number of shipments, reduced draft rates, higher freight rates. And that's, causing some problems with, or I shouldn't say problems, but influencing basis. And if we continue to see that persist throughout harvest, that definitely becomes concerning and can really throw a wrench in those cash prices for farmers that normally grow grain that ends up getting shipped out on the Mississippi.
Do you have any final thoughts or recap about the Farm Bill and Trade 45Z models?
Yeah, I mean, I think definitely those three things when we think about Farm Bill, trade, 45Z, and I'll just take that a step further to widen that out to just ethanol use in general. you just hit on some of our really top priority areas, and those are all things that are sort of in flux right now. Always tend to have some issues surrounding those things. And, as we look ahead, definitely want to see a farm bill pass that provides that adequate safety net for farmers who are operating in really an uncertain environment and really a tough economic position right now. A trade, when we think about the farm bill, it's important to have that safety net in place, but really we think about our trade and ethanol and opportunities for expansion in ethanol like 45Z may provide. When we talk to our growers, they really want market opportunities that result in a price that allows them to be profitable. So they want, it's helpful to have a farm bill in place. It's something that's really critical for that backup safety net. But the real ultimate goal is that we never need those safety net programs because we have markets that really drive a price that allows for profitability and those farmers to continue to flourish and produce the crop that they can produce.
Thanks, Kristen. We enjoyed our conversation for today.
Thanks, Cesar. I enjoyed the chance to talk with you. Great to be on again.
This is Kristen Swanson from National Corn Growers Association on back roads of Illinois. Your morning markets update minute on back roads of Illinois. Corn futures are 3 to 5 cents down at the half. Soybean futures finished and down 7 to 9 cents at the quarter. Wheat futures finished and up 8 to 10 cents at the half. Let's go with a livestock markets update sponsored by Kyle Bumstead from Allendale Incorporated. Cattle futures finished and up 3 to 5 cents. Feeder cattle finished and up 4 to 5 cents at the half. Lean hog finished and down 8 to 9 cents. Crude oil finished and up 3 to 4 cents per barrel. Dow Jones finished and up 3. We got Arlan Sudermmann from Stonex Financial in Kansas City. How are you been? How's the corn market for this afternoon?
Good afternoon, Cesar. It's good to be back with you again. It's a beautiful day in Kansas City and sunshine in the mid 70s and a beautiful fall day for harvest. The corn market is also turning better this afternoon. We're kind of in a pattern where last couple of days this week, it has traded higher in the daytime. And then overnight, we see farmers selling, and that's on both sides of the equator, both the United States farmer and the Brazilian farmer selling against the rally. So we're entering into a big harvest period, and that tends to press prices lower at night. But then we come back, and as soon as that selling dries up, we find some strength once again in the daytime. So we're still very early in the harvest period.
How is the beans in Brazil?
Well, Brazil is trying to get started with its planting season. It's been too wet in the south of Brazil. In the center west of Brazil, where their most concentrated production areas are, the rainy season hasn't started yet. And the dry season was extra dry this year. And so they have record drought in portions of the center west region, and they're waiting for those rains to return to plant. They would prefer to have started planting 2 or 3 weeks ago. But it's okay. They can plant soybeans late and still get normal yields. So they're waiting for those rains to start. The weather models had been consistently saying that those rains would start the first week of October. Now, as we're getting close to that time, the models are starting to push those rains back further. They're pushing them back to mid-October now. They can still grow a good soybean crop if the rains start in mid-October, and in early developing La Nina years, that's typically what happens. The risk will be as it delays the soybean harvest several months down the road, that delays then the planting of their winter corn crop, or it may be known as a safrinha corn crop. That doesn't mean that you necessarily get a short corn crop, but it does increase the risks for that corn crop. So that's their primary concern at this point.
Arlan. All right, both of these candidates want to put tariffs again to China. However, China has brought our beans. What is your takes on this?
China is the largest importer of commodities in the world. So what happens with China matters a great deal. It used to be that they would buy 35 million metric tons of soybeans from us each year. That equivalates to about 1.3 billion bushels of soybeans. But they've been ratcheting that down as Brazil has been expanding production. There's a couple of reasons for that. One, they want to overtake us as the world's largest economy, so therefore it doesn't make sense to send us their money. And second, with a cheaper currency in Brazil, Brazil's soybeans are usually cheaper most times of the year. And so they will tend to buy everything they can from Brazil and then fill out the rest of what they need from the United States. So as Brazil continues to expand production, and demand in China is really slowing down the growth of it and is flattening out. So they're buying a larger and larger portion of what they need from Brazil, and that means less from us. As far as tariffs at both candidates, and both candidates really do have very similar trade policies with China. They may just express it in a different way or maybe enforce it in a little different way. I think that regardless of what happens with tariffs, we're going to see this continued movement away from China buying from the United States and then buying more and more from the BRICS nations. And that's primarily going to be from Russia and Brazil. They're going to buy from their friends, so to speak. So I think we need to prepare ourselves for that demand coming from China to gradually ratchet down to where it simply isn't there anymore in the years ahead.
How is the carry-out numbers for right now?
Well, the carry from the standpoint of weather problem in another major production area of the world, our focus over the next year or two is probably going to have to be more defensive in our marketing in order to try to protect the equity we've built in our farm in recent years until we can turn this cycle around.
Could you tell our listeners about the cattle on feed for last week and the CFTC report as well?
Cattle on feed report was about as neutral as you can get, kind of showing that we're continuing to deal with restricted numbers of cattle, albeit a little bit more than what we thought we'd have at this time a year ago. And it's interesting to see as we look at the supply of beef in America right now, we have significantly shrank the number of cattle going through our feedlots over the last couple of years. But the amount of beef that's available to the market is essentially at record high levels because of the record carcass weights that we're getting. With cheap feed, it's made it incentivized feeding these cattle for longer. The structure of the market has encouraged that as well. And then you add to that the amount of imports coming into the United States. The combination of heavy carcass weights and the imports have really increased the supply of beef to the marketplace. Overall, when you talk about the CFTC report on Friday, it showed that the funds are unwinding their short positions or their sold positions in the grain and oilseed markets. When you look at the ag complex as a whole, they are doing so. And they really started stepping up doing that after the Federal Reserve cut its benchmark interest rate by 50 basis points, with many of these fund managers now starting to see maybe the time of commodity deflation coming to an end, with the economy here in the United States and the world starting to grow again, increasing demand for commodities, and ending the time period when they want to own those big short positions, at least for the time being.
What happened to the expansion of beef from last year?
Not seeing it. And so we're continuing with the tight numbers overall.
Do you have any final thoughts or recap?
The primary focus right now is on the harvest and getting the harvest in. I'm concerned that we're going to have some storage problems, particularly in some areas where the yields are really high for both corn and soybeans. And so that could end up pressuring basis significantly and even push enough onto the market to pressure the futures market as well. We've got to get through this harvest period. It does look like areas of the southeastern Midwest in the southeast United States are going to see some significant rains from the remnants of Hurricane Helene as it comes on shore in the Florida Panhandle and then moves to the north, and then the moisture gets caught up in a low pressure area already in the Midwest and gets pulled to the west toward the central Mississippi River Valley and along much of the Ohio River Valley. That'll delay harvest. In some cases, it'll be excessive rain, which be bad for cotton in the southeast, as well as soybeans that are mature and ready for harvest. But overall, the harvest interruption should be relatively short, and the rest of the Midwest should be able to continue with harvest progress.
Where people can find you for their risk management consulting services on the grain markets.
Well, you can follow me on X, formerly Twitter. My handle is Arlan, ARLAN, FF101, or you can find me at our website at stonex.com.
Thanks, Arlan.
Thank you, Cesar.
This is Arlan Sudermmann from Stonex in Kansas City on back roads of Illinois. Close bell numbers of the commodity markets from Kyle Bumstead from Allendale Inc. November feeder cattle plus dollar. 650 closing at $244.050. December live cattle dash dollar 075 closing at $184.325. December lean hogs dash dollar 075 closing at $74.900. December corn plus 3 single quote for closing at $4.15 single quote to November soybeans plus 11 single quote 0 closing at $10.53 single quote to December Chicago wheat plus 11 single quote to closing at $5.89 single quote to December KC wheat plus 10 single quote 0 closing at $5.81 single quote 0. Closing quotes provided by Kyle R. Bumstead Branch Office Manager Erickson, Nebraska Allendale, Incorporated. The risk of loss. Thanks for Allendale Inc. for this markets update on back roads of Illinois. Thanks to all of our guests on today's program. We're running out for today's program on back roads of Illinois, but you can listen to our show wherever you get your podcast. That's been Back Roads of Illinois. I am Cesar Delgado. Have a great day.